Right, Sunday the 21st of April, it's Easter Sunday. What am I doing working on Easter Sunday? Right, this is a chart of the dollar index to try and give us some idea of where the dollar's going, and it gives me no idea whatsoever because we're in this big sideways trend, as well you know. Big move up Friday, or big move up, yeah, that was Friday. No, it wasn't, that was Thursday. I don't think there was any way of predicting that myself. Maybe you do. All I can tell you is it held the 55-day moving average, which isn't usually a major support level, but for some reason that worked. And we rocketed, but you know, it's a sideways trend. And as well, you know, what really matters is the previous highs around 96.75. My fib's slightly off there, actually. I better remove that and redo it. There's only a few pips out. And this trend line really is what's going to be key for the for next week, running into the end of April. 97.75, 97.80. We got 97.75 as these peaks, or 97.70 actually, 97.71, 97.69. Okay, so the whole 97.70, 97.80 area is the important resistance area to watch. If you try a short there, you want to be probably stopped out at around certainly 97.90. That would be around this area, around this point here. And if we can sustain a break above the trend line, that's obviously positive. Looking at the weekly chart, I know you've heard all this before. Looking at the weekly chart, there we go. We've got 61.8% fib at 97.87, so a break above 97.90, sustained break above there should be a decent buy signal and should hopefully mean that this consolidation phase is over and then we get a bull trend for the dollar. Aussie versus the US last week, we were getting short up to 72.00. We got to 72.05. The shorts worked really nicely on Thursday as we collapsed down to 71.33. 200-day moving average doing its job there. We've got a bit of support, well, obviously from the 100-day moving average, which is exactly at 71.33. So that explains why that acted as support. Little, very minor trend line here. At around 71.23. I wouldn't pay too much attention to that. If we start holding below 71.30, it's going to be negative for this week. So at the moment, this looks negative. Stochastic's turning negative just to kind of confirm that. We're in a sideways trend and we're just rejecting the upper range of the sideways trend, or the upper range over the last 2 months at least. Yeah, more sideways action. Very exciting. New Zealand dollar, as you remember, I found all this rather frustrating. I was looking for the New Zealand dollar to head lower against the US dollar, and I kind of picked the wrong entry level because, well, anyway, I picked the wrong entry level, and in the end, it was this little trend line that worked. However, hopefully I redeemed myself by getting us into a short at 67.30, 67.33 on Thursday, as we peaked at 67.48. And this trade did work nicely as we've sold back off. And this just does look negative. Clearly the 200-day moving average doing its job. And we just hovered on Friday in a quiet session. Hardly a surprise, bearing in mind the extended holiday over the weekend. But this just remains looking pretty negative. So if you're still holding shorts, that looks fine by me. There is that little trend line. I don't think it's too significant, but it is holding. So a break below last week's low of 66.67 should start the next leg lower. And I do think that is the most likely scenario. Dollar yen, well, we're short around 112.00. That trend line worked last week. We are overbought on the daily chart. We do have a potential double top around the 112.00 area, well, above it. 112.12 and 112.16. So a clear double top potential. I would rather be short than long for that reason. And we've got the 200-week moving average, which seems to be doing its job. It is descending, obviously. Looks like we've got it around 111.97. So we really need to hold below there, and then the shorts are going to be happy, and we can sell off this week. We've got a little bit of trend line resistance. Obviously this is rising, so it makes stops a little bit difficult, because ideally you want to have a stop on shorts above, say 112.35. So that is getting wider and wider, but really if we break above 112.16, I think you just want to be out of that anyway. It's too risky, and this isn't a strong resistance level, so let's keep the risk tight and stop out above last week's high of 112.16. Euro yen, hard to read. We collapsed on Thursday to my buy area at 125.75. 125.70 with a stop below 125.55. So although the market held, we didn't get a huge bounce. We only bounced to 125.89, but clearly the support level has held. So obviously that is the level that needs to hold for bulls this week. We've got the trend line going back to, where is it now? Here we go, back to the beginning of November. So it's a fairly decent trend line. There it is. No, it's not. Sorry. I've got my trend lines mixed up. Here we go. It only goes back to the beginning of March, but it coincides with the 100-day moving average and the rising. We've got the 100-day moving average and 55-day moving average sort of coming together around 125.70, 50 or 55, which is why below 55 you want to be out of this. This isn't the greatest trade, but you know, I'm trying to find levels that are tradable, and at least that one does appear to be tradable. Note the stochastic pointing lower. So and the euro was pretty weak on Thursday, Friday across the board. So just be careful. A break below 125.50 would be a sell signal. Having said it's difficult to read, that 200-week moving average worked perfectly. Again, it's done well this year for this pair. On the weekly chart, it looks like if we do break lower, we could be heading down to 124.00, 123.80 as an ultimate target. Euro US dollar, unfortunately, I got completely wrong. We were buying it at around 112.90.80 with a stop below 112.65, and we did get stopped. Strong dollar, as we know. So plunged on Thursday. This just looks negative, but it's just so hard to read, as I've been saying for such a long time. Because we're in a sideways trend, and I got all excited because I thought we could start to push higher and up to the mid 113 area. Wrong. At the moment this looks negative, but of course we could reverse on nothing and head back up to 112.90. I'm just going to have to leave this one alone again. Okay, the cable support has dipped a little bit. I'm looking at the 200 and 100-day moving averages as they converge around 129.65, 129.55. The only concern for me is that we've broken this little trend line. It's not massively important. It's only a month and a half old, but we've broken it and we've held below it. So we're going to have to see what happens around here. We start breaking below 129.40. That's going to be pretty bad news for cable. Oil, I talked about some sideways direction ahead of us on the 10th of April, and that's what we had. I thought we were forming a bull flag and then would eventually break higher. I thought we were starting to see signs of that on Wednesday, but I was wrong. Thursday we reversed, so we're still trading sideways. I don't see a sell signal for oil despite the overbought conditions. I do see this as typical of what we've seen recently in oil, where it goes up, forms a bull flag, breaks higher, forms a bull flag, breaks higher. So let's stick with that pattern. Look to jump on a break above. Well, here's my trend line. Trend line is around 64.60 at the moment. It'll decrease a little bit. So 64.50, 60 is the obvious resistance. We've got the high at 64.79. So clearly a break above there should be more than enough to have cleared the trend line and give us the next buy signal. Weekly chart does not give us any extra information really. These candlesticks are fairly negative, indicating the sideways direction, which is kind of what I expected. We are very overbought on the weekly chart, but there's no sell signal, so I wouldn't even dream of getting short this at the moment. US stock markets, I'm getting asked about these and whether we should be short. This is the weekly chart. Yes, overbought, of course, after such a big run up. This is a minor negative candle. It's more of a neutral candle than anything, this doji on the weekly chart as we approach that trend line, which goes back to November of last year. We're not too far from it. Well, the trend line basically cuts in exactly at the all-time high, around 29.44. So clearly that is the level to watch. If we do get held by the trend line in the previous high, we've got a big double top pattern there, which obviously would be very negative. Daily chart really more of a sideways thing. As we become overbought, stochastics are turning lower, but not much of a sell signal. Okay, on Thursday or Wednesday I think that was, we did spike higher, closed lower, in fact took out the previous 2 days low. So yes, you can see that as negative. And then on Thursday we did go down a little bit further to 28.90, but recovered quite well to 29.11. I can't say that I'm seeing anything that really tells me to get short this market, not yet. But obviously holding longs is increasingly risky after such a strong run, and we're overbought, and we're getting sort of neutral signals if nothing else. If you're looking for a reason to be short, and I know a few people are, well, we've got this very small trend line which formed last week, coupled with the 100-hour moving average at 29.09, 29.11. So, you know, as long as we hold below there, then we could see some moves to the downside. We'll need to then hold below 29.00. Yeah, 29.00 would be this little rising trend line is going to come in around 29.00. It's going to meet the 200-hour moving average. So break below 29.00 would be a little bit negative in the short term. But as I say, I'm going to struggle to really suggest a short position in this. It's pretty risky.